Assalamu alaikum friends, welcome to SBR revision series for September 2021, and today we are going to cover fair value measurement. And this fair value measurement is, I cannot say it, I cannot tell you how important it is, because it comes in almost every standard, whether it is for deferred tax, whether it is for your financial instruments, whether it is for your what do I say, employee benefit, whether it is for your non-current asset, whether it is for your intangible asset, whether it is for your anything, even for your group accounting also, consolidation purpose also, when you have to value the goodwill, when you're taking the NCI, when you're taking the net asset of the subsidiary, all this area includes fair value measurement. That's why this standard is so important. Okay, so here we are going to study how do you define, what is the definition of fair value, how do you value. Okay, we have a hierarchy to use in order to value, use fair value. And then we are going to go through principal market and most advantageous market. These are the two markets we take to get the fair value. And for non-financial assets, how do we find the fair value? So let's start with the definition of fair value. And in your answer you must have seen that whenever fair value question is given, okay, and fair value question directly they don't give you, okay, indirectly it is hidden in the main standard, so you have to be able to find out whether IFRS 13 you have to answer about it or not. Okay, so this definition you can memorize it and keep it and use it in your answer. Okay, fair value is the price that you would get in today's term, today's price. Okay, in the market today, if you sell the asset, how much price you are getting for that? For example, my mobile phone, right? iPhone 10, let's say for example, I want to sell today. So what is the price that I'm going to get? That also in open market. Okay, so what is the price? And this price is same. The price that I am going to pay, the other person also has to pay the same price only, depending on the condition of the market. It will not be different from person to person. Okay, so fair value is market specific, not entity specific. That's why it's known as fair. That means it's fair for everyone. That value is fair for everyone. From your exam kit questions, you can do this question: ZTech, Skyzer, Meheran, and Clansat. Okay. So this question mainly deals with the valuation of fair value. That means it talks about IFRS 13. But other than that, also when fair value comes up, you have to use this standard. Okay, with other standards also. So there is a hierarchy that you need to follow. Okay, first there are three levels to measure fair value. Three. We always start with level 1. We always look for level 1. Why? Because level 1 is the best. If level 1 is not there, then we go to level 2. If level 2 is also not there, our last resort has to be level 3. So what is this 3 level? Level 1 is quoted price. This price you easily get it in the market for identical assets. That means for the same phone, for the same iPhone, what is the price in the active market? And definitely it's very easy to find for the mobile phone. Why? Because the mobile phone is in a very active market, right? Active market means the buying and selling is very frequent, very active. It's in a huge volume. So it's easy to get the prices for the identical asset, right? Quoted price. That is the best because that is the safest also. No risk is there. Then we are going to level 2. What is level 2? Level 2 is for, it is okay, not so bad, but little not the best, not like level 1. Level 1 we get it easily. Level 2, quoted prices, yes, for identical assets also yes, but in less active market. Either it could be in less active market or quoted prices for similar asset but in active market. Similar asset means not exactly the same. Maybe the model, maybe the phone which I'm using, maybe the model might be different, right? So like that, but it's an active market. Or it could be exactly the same phone, same model, same feature, everything, but in a less active market. Usually mobile phone is not a good example for less active market because it is in a high active market. Intangible, you can say intangible is a market where it is not in an active market, right? So you can take the example of intangible. There you can use level 2 input. Now let us go to level 3. Level 3, this is the most risky to take. and it should be the last resort. If you are not getting any information from level 1 and 2, then you are going to level 3, otherwise no. Unobservable inputs, that means you are not able to get any prices are not quoted. You're not getting for identical assets also, you are not getting for similar assets also, because there's no active market and there are no similar asset also. So how do you do that? You estimate, then you estimate, right? You estimate your cash flow, find the present value, you discount your cash flows and find the present value. That's how you estimate. It's just an estimation. So estimation is always considered to be more risky than an amount which you can easily get it from the market. That's the reason we are not paying so much of attention to level 3. It's the last resort. So remember, priority is always given to level 1 input when you are determining fair value. Okay? And when they tell how you're going to determine the fair value, if a question is asked like that, you have to talk about this hierarchy. You don't have to draw this hierarchy there, but you have to talk about it, that these are the 3 levels, and in your scenario that is given to you, it falls under which level 1, level 2, level 3. Okay, now we are going to the market. So fair value is determined by referring to the market. What is that market? Principal market. Principal market is the market where there are greatest volume of activity. One example is car market, car, right? So when you have to determine a fair value, you are taking one market, which is the principal market, where there are greatest volume of activity taking place in that market. And from there, whatever the price they are changing, that you are taking as a fair value. Next, if we don't have this principal market, then how do you determine the fair value? Then we are basing our price on the most advantageous market. We see what is the price that is in the most advantageous market and taking that as a fair value. Okay. Now, non-financial assets. So non-financial asset, how do you find the fair value? Non-financial includes these two things. One is property, plant and equipment. The other one is intangible assets. So if you are given intangible assets or property, plant and equipment and you are told how are you going to find the fair value, then remember you have to mention this, that they are non-financial asset. Okay, so if they are non-financial asset, then the way you find the fair value is different. Then you cannot use this market, principal market and most advantageous market. No. Then you have to use the highest and the best use for that asset. What is the highest use for that asset and what is the best use for that asset? One example is, for example, a land. A land can be used as a commercial also. It can be used for residential purposes also. So out of this two, which one is giving you the highest and the best use? That only you have to take the fair value, whether under commercial terms or under residential terms. Okay, that only you are taking as a fair value. But remember, this is only for non-financial asset. Even land, mostly land is given, residential and commercial. So land falls under that. Land falls under property, plant and equipment. And same applies for intangible assets also. So that's it for IFRS 13. Next, we are going to cover IFRS 50, which is revenue from contracts with customer. So see you in the next video. Thanks for watching.